Dollar is weakening. Stocks are pumping. That tells me we're going to have a risk on today. Risk on sentiment. So just entered into a NASDAQ long position as we speak. Gonna set to take profit around the previous high. Yep, and everything is set. Now we're just waiting for Powell. And it should come up in about 6 minutes. If you see that the speech is starting, please give me a shout.
Yep.
US 30 NASDAQ, new all-time high today. Gold, I'm expecting a sell. Gonna move stop losses a little bit further up. How's your week so far?
Chill.
It's always
Summertime.
good. Yeah. Last weeks of August is always
Привет.
1 minute and 20 seconds, and then we should hear the man himself, Jerome Powell, giving his closing speech during the Jackson Hole Symposium in Wyoming. So let's have a look on TradingView for a second. I'm expecting Powell two things. The first one is to give some hints about the future monetary policy for the remaining of the year 2025 and into 2026. That shouldn't be a surprise. I'm expecting that he will stick to the 25 basis point one interest rate cut for this year. The second thing is I'm expecting him to hit a hawkish tone. So he's going to be delivering a hawkish message because the US economy is still too strong. Inflation is under control, even though it did start to pick up. Labor market conditions are tougher than expected. So yes, unemployment is increasing, but the number of job creation hasn't increased that significantly. In fact, it's fallen. So if you look at these, it balances out, and we should have Powell now because the market is pumping up. The fuck? He hasn't even started speaking, and gold is pushing higher.
Such manipulation, isn't it?
No, just expectations.
Balance of warrant adjusting policy. That's going to get Wall Street's attention because it's opening the door to a rate cut. Here's the key sentence. With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. The Fed is also announcing its new framework, which is pretty much as we were just talking about with Pat Harker, dropping the reference to the effective
I'm entering another sell.
Makeup strategy, committing to contain inflation expectations and concern.
I'm getting closed out of my positions.
Shortfalls. But the key here is that there are
I re-entered another sell.
to employment. The Fed chairman says the inflation outlook is that it will rise, but perhaps at a slower pace. So right now we are looking at a Fed that has the door open for a September 17th cut. And I guess, Lisa, we're probably going to see the long end.
Well, where is the speech? Because this is...
Well, let's pull that up right now. You do see an absolute catering in yields on the heels of this opening up to the potential for rate cuts coming out. The downside risk.
Does anyone have the link for the speech?
Which you can see also rising. The S&P 500 now up 1.3%. Yields down 8 basis points on the long end for the 10-year, even more for the 2-year.
And looking at the inflation-adjusted
No,
yield,
are they going to stream a recording or what?
That is substantial. It's still within the range, but at 1.86%, it's a real reversal towards a presumption of Fed accommodation.
Yeah, and this comes at a time where there is this question of how they are going to message this, given that inflation has remained above that 2% target since 2021.
Okay, US 30 position is doing very well.
Anything about why
Sorry,
this
NASDAQ.
is a Fed willing to look through
The gold is
that kind of
pumping, and there is no Powell speech.
They do anticipate that tariffs are going to add to inflation, and they think it will take place over time, but they're still looking, at least as Chairman Powell puts it, they're still looking at these as one-time price adjustments
Where's
within
speech?
each sector. So it's likely that inflation is going to go up. But
right now, let's take a listen to Jay Powell, Chair of the Federal Reserve.
In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework as captured in the revised
That's not live.
on longer-run goals and monetary policy strategy that we released today.
And I got closed out
When I
all of my
appeared at this
positions on
podium
gold.
1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year.
And now,
Restrictive policy stance was appropriate to help bring down inflation and to foster a
price,
sustainable balance between aggregate demand.
if you look at, I'm going to stop Powell for a second because he's shifting economic risk. Okay, I'm reading the commentary. Okay, so Powell said that job risk opens door to rate cut, but doesn't commit. I need to read this. It didn't say anything yet, so I'm entering another sell on gold on the weekly pivot. And there's absolutely nothing. So this is a recorded, this is not the live speech.
Are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth.
Okay,
Over the long
I'm showing you trading view. I'm at the trader in a second, so enter the sell on the weekly pivot. And setting stop loss just above the weekly pivot, let's say 33.62, and targeting the bottom, so 3300 still.
Changes in trade and immigration policies are affecting
I'm long
demand
on.
and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment.
So basically what he says that there's a fine balance they need to find, because obviously Trump's policies are weighing on inflation, but the labor market is cooling, and Trump's tariffs are lifting inflation. And the policy is already in a restrictive territory. So if you look at interest rates, it's been high enough, long enough. So it's been 3 or 4 years now. The interest rate is well above, 4%. And quoting Powell, with policy in restricted territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. But it doesn't mean it's a rate cut or interest rate increase. So this is why it doesn't make sense for now. The Fed instead held its main rate at 4.5, following 1%. This is bullshit. This is not a live speech.
The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output.
Yep. Now I'm pulling out.
Higher tariffs have
Guys, I was pissed off today. I lost the profits from yesterday.
The latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July.
Closing the day with minus £600.
Core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts.
So inflation will rise.
What matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level.
Yeah, that's what they said. So
one time does not mean all at once.
That's what they said when inflation started to rise. And I don't know what was the proper word they used. Transitory. Yeah, that was the word they used 4 years ago, when inflation hit 50-year high. Powell said it may be transitory. Well, it turned out it didn't, did it, Jerome? So yeah, I'm shorting gold, entering another sell because this is bullshit. So basically, the speech that you hear now, it wasn't live, and he started speaking earlier.
Real incomes decline because of higher prices, demand and get higher wages from employers.
Yeah, I just looked on
setting off
YouTube and it
adverse-
says, okay, the program started 2 hours ago. Apparently.
Yeah. So there were some other speeches
Yeah.
as well, but I'm using
Yeah, yeah.
I'm checking Bloomberg, watching Bloomberg television, and the market already started pumping. But Powell, there was no live stream. I couldn't find the live stream link, and it is what it is. So
our target for
got closed out from some positions, wiped out all the profits from what I closed today. That was £2,200 or something. But what Powell so far said, inflation is going to rise, growth will stall or decrease, and that is the perfect description of stagflation. And yes, the Fed needs to cut interest rate in that scenario, but I'm focusing on inflation right now.
Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem.
US NASDAQ position
Putting the
is
pieces together,
a
what are
nice
the
profit.
implications for monetary
It's about
policy?
240 pips.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside.
Fuck,
a
wow.
challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance
That's
of risks.
absolute bullshit.
We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American
Yes,
people.
your mandate.
We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus
The
statement,
funny
to
thing
say-
is that Powell said that shifting risk balance may warrant policy adjustment, but it doesn't mean lowering or increasing interest rate. So growth forecast decreased, as we saw in the last few summary of economic projection. Labor market conditions remain very solid, so full employment is almost guaranteed. Inflation is going to be a problem. But there's no new information so
Second
far.
public review of our framework.
So I'm adding another cell. I got closed out from 4 cells now. I'm adding another one. I'm just going to listen.
Supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB.
Okay, so this is not really
along
relevant
with
for
low
us
growth,
because he's
low inflation,
talking about
and a
the
very flat
past
Phillips curve,
and what the job
meaning that
is the Federal
inflation was not
Reserve.
very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008.
Abdullah Hakimi, hello Thomas, what do you think
Many
about the
here will
Trump
recall
speech? Do you have any
sluggish growth and
speculation that may
painfully slow
ruin or
recovery
wins
of
in
that
indices?
era.
To
It
be honest,
appears
it's an
highly
absolute
likely that if the economy
blindfolded drive
experienced
for the
even a
Trump
mild
speech. You know,
downturn,
he's a loose cannon
our policy
or
rate
loose
will
gun.
be back at the
I have
ELB
no
very
idea what
quickly,
he's going to say.
probably
I'm
for
pretty
another
sure he's
extended
going to
period.
have some
Inflation
remarks
expectations could
about Powell. So we still have, you know, the Trump speech is in 2 hours. He can absolutely flip the market. Absolutely. The Trump speech today was an unexpected shit show. So last year and the previous years, the last 4 years, he always gave a live speech with a clear starting time. But it looks like that this year he already started speaking before 4 o'clock. And what we hear is just that there's a delay of at least 2 to 3 minutes, which got closed out all of my positions, and I had absolutely no chance to react to what he says because the market already moved. I'm so freaking pissed off.
Ensure that inflation expectations would remain well anchored, even with the ELB constraint.
Crypto pumped, yeah, indices pumping as well.
When inflation had been running persistently above 2%,
so I think on gold,
appropriate monetary policy would
just stopping Powell for a second or muting him. I think on gold this was a buy the news and sell the fact. So if you look across the markets, yields definitely dropped to 3.7% on the short end. And crypto and indices are pumping. So whatever is the case, even if Powell deliver a semi-dovish speech, the winners today are going to be crypto and indices. Already, you can see that we're running in 270 pips profit on NASDAQ. Of course, I lost a shit ton of money on the gold, but I think this is unsustainable to keep up because there is no way. There's very few occasions when gold and indices and crypto are going up at the same time. So one of them have to be a loser. This is a zero-sum game. And if indices and crypto continues to pump, gold will be the loser, 100%. There's no way. This is unsustainable. So this is why I'm holding my long position on NASDAQ and the short position on gold if I don't get stopped out. Plus, we have the Trump speech coming up just after Powell in about an hour and 30 minutes, 45 minutes. And we don't know what he's going to say. I have no intention to trade that because that's going to be not difficult to trade, but uncertainty is not something I like to trade. That said, Powell today screwed me so bad. It cost me £2,000 already, minus £2,000 because these idiots didn't start a live speech. It was at least 2, 3, 4 minutes delay or recorded. So it's an absolute shit show. They never done it before on the Jackson Hole Symposium. I'm closing down all the positions on gold. I'm absolutely pissed off. I lost 2K today. Now it's 3K. Sorry guys, but this is not something I was expecting.
Yeah, this was a fiesta.
Yeah, last year was easy. Powell came in time, went on the podium, and he delivered the speech. It was an easy thing, but why on earth did they delay it 2-3 minutes this year or recorded it? I have no idea, but this was a market manipulation. This is the real manipulation. Absolutely pissing me off. I can't do anything. So that's it for me today, guys. I lost money. And I'm still holding my bias on gold as a sell. I'm entering another sell, but I had to cut my losses because now it's up to 4.5K. And I don't see it could regain. Yeah, 4.5K today. That's the loss. But that was not a live speech and it's pissing me off. Because the market already moved by the time he started speaking, when they started streaming his speech. So it was either pre-recorded or there was a delay of 2-3 minutes. Absolute shit show.
Is restrictive, modestly so in my view. The idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the
And now it's
inflation that
passed
arrived
through the weekly
a few
pivot.
months after we announced our 2020 changes to the consensus
No,
statement.
I'm done for
As
today,
I
guys.
acknowledged publicly in
Apologies from
2021.
everyone, but this is not something I was expecting. This was not a live speech, and it's pissing me off.
There is
No
nothing
worries,
we
Thomas.
can do about it.
Yeah, but you know why? The last 4 years, every single time, it was easy as hell. You came on stage, delivered a speech live, not recorded and not delayed, and we made money. But this year, I had absolutely no chance to react. So I'm gonna book 4.5k loss today. £4,505. I will post it on Discord. Transparency is key. And I wish you good luck, guys. Hopefully with the Trump speech, you're gonna have more luck. Because Powell screwed me today bad. And I'm gonna have a beer now. So
Yeah, have a great weekend. Me too.
fucking Powell.
You deserve that.
You will make it back quickly. You are the best.
Yeah, I know, but it's £4,500. You know how much is the money? It's a lot.
I know. It hurts.
But thank you, Thomas. Have a nice weekend.
You're welcome, guys. Good luck from the Trump speech. If I leave the 2 sell positions on, this is my last resort, but I'm not going to enter into any other sells. Let's see, what is the loss? Yeah, I'm going to widen the stop loss a little bit, and I can only pray that, you know, this is a Biden using sell effect on gold. If indices continue to pump, gold will lose against indices and crypto. Good luck, and see you the week after next, because next week I will be on holiday. Thank you so much.
All right. See
Sounds
you.
Bye.
Stay safe.